And what I learned really shocked me. Financial industry is basically working for itself. It's not helping people. It's basically, just taking away our money. That is why I wrote the book. That is why I have seminars all around the world to teach people about these things. They will recommend you the worst possible products. Why? Because they make a lot of money with them. A good start would be to increase your financial education, read a couple of books, watch a couple of videos and so on. I always recommend 2 books about personal finance and investing. One is Robert Kiyosaki, Rich Dad Poor Dad. This is the foundation, where you can understand what are assets and liabilities, and you understand your personal financial statement. And then upgrade of that is my book, The $1 Million Decision, because I talk about what are the good financial products, what are the bad financial products, and I am more focused on non-American markets. Because Robert Kiyosaki mostly is about real estate. He's mostly focused on real estate, but in the rest of the world, real estate is quite different, so you can have a lot of problems applying his strategies to European markets or Russian market and so on. So I use business, I am a business owner, and I use my business as a way to earn money. Some other people use real estate as a way to earn money. But then, when you earn money, you need to invest part of that money into the passive investments. I'm investing mostly, or all of my investments are basically passive. So I'm investing in index funds, so stock index funds. These are the basket of stocks with very low fees. You never know when one company will go down. And even Apple, the most profitable company in the world, they can go down, they can go out of business. So I'm not investing in individual stocks. That is why I'm investing in index funds. I invest in hundreds of stocks to diversify my risk. And it's the same with crypto. So I'm not investing only in Bitcoin, but in a wide selection of coins. A simple answer, no. I don't invest in IPOs. Why? Because I don't invest in individual stocks. So I only invest in basket of stocks. When you invest in individual stocks like IPO, it's one stock and it can go up or it can go down. If you do a lot of research, if you know what you are doing, if you understand the risks, okay, go and invest in IPOs, no problem. But if you don't do your research, if you are just listening to your friend saying, oh, this company is great, it's not enough. It's not a good idea. You need to be educated first, and then you can make a lot of profits. But if you are not prepared to learn and to take your time to research and so on, just leave it out. So one of my biggest rules in investing is that you need to understand the investment first. Don't invest in something that you don't understand. So that is why I always, when I have my seminars and in my book and so on, I explain in detail what is the difference, for example, between mutual funds and index funds and so on. So people understand what is behind that, because if you don't understand, it's better to not. So my philosophy is very simple. I try to give people a very simple solution for this complex world of investing. And my biggest advantage, I think, is that I can simplify things. Most experts in the financial world are talking in a very complex language. And you basically don't understand anything. And because I don't come from the investing world, but I only came in this world later, I can still understand how most people feel about this. And I can understand what is their level of knowledge. So that is why I explain everything in very simple terms. So people, when they come to my course, they understand things, and then they get precise solutions how to do or how to implement everything that I teach. So basically they come out of the course with an exact plan, step by step, how to do it. I don't use gold as an investment where I would expect big returns, because historically gold only kept pace with the inflation and a bit more. But historically it was also less profitable to own gold than to own bonds. So gold is not an investment that I am making in order to get returns, but it's only for security.
Only for safe money.
Yes, let's say that something really terrible happens in the world. Then gold can become very useful, because when the system fails, people go back to gold, as a trading medium. But the good thing about the stock market is that after every crisis, there is again, a period of rising prices, and this is the nature of stocks. That is why I invest for the long run mostly in stocks, because stocks, it's in their nature to grow. because companies innovate, they bring new value to the market, and you can be pretty much not 100% sure, but 99% sure that the stock market will move upwards in the future, with ups and downs, of course.
So,
but the trend is up because the companies create value. If you are trying to time your decisions, when to buy, when to sell, and so on, speculate and trying to find
catch this time.
90% of people will fail, and they will lose a lot of money. So I'm not even trying, So I know that there will be a downturn. It's normal.
It's history.
This is history, it's cyclical. But my long-term investments, I don't intend to sell them. I don't intend to mess with them. They are just there and they are running, and I don't care what is happening on the market, because these are long-term investments, that I made for at least 10 years. Because I'm quite young, I'm 17 years old.
Yes, good joke.
I'm 42 years old, so that is why my investment horizon for long-term investing is at least 25 to 40 years. So in this time period, it's almost impossible that stocks would give us worse returns than anything else, So it's very, very highly probable that stocks will outperform everything else in the period of 25 to 40 years. Because my long-term investing is for at least additional 25, 30, 40 years, I don't need bonds yet. Because it's very, very unlikely that bonds would have over 20-year or 30-year period that bonds would outperform stocks. Almost impossible. That is why I still keep everything in stocks. But when I will be older, maybe when I will be 50, 55, 60, then I will of course buy much more bonds. If you are young and if you don't have a high income already, then start with building your money-making skills. So don't start with investing, because you don't have a lot of money to invest. So start with building your money-making potential. Learn about business, learn about marketing, about selling, about negotiations, about leadership, and so on. And you will be able to earn much more money in time. And when you have more money, you will be able to invest more. So for people who are younger and who don't have high income, I would really recommend this strategy.
To double the income for starting.
First focus on increasing your income, and then start to invest. So first you invest in your knowledge about how to make more money, and only after that you start to invest. And when you start to invest, remember that investing is very simple. It's just the financial industry that tries to make it very complex. All the strategies that I'm using are very simple. I'm investing in low-cost index funds, nothing to do there. You just need to pick the right ones and so on. So it's very simple.